Thanks, Steve. Well, the clock's ticking to file your taxes. So this morning, we have some tips if you're running a beat behind and some ways you can get ahead and get some more money next year. Small business owner, author, and columnist, our good friend G. Marks, joins me now to break down some of his tax tips. I just emailed my husband, good morning, by the way.
Good morning.
And I was like, is the accountant cool with our taxes? Because he usually handles that.
I know, this is the time of year
when you come in, I'm like, ooh, does he need my signature?
Yeah. Sometimes I get weird when we do segments like this that like people are just turning the channel now. They're, like, turning off the
well, hopefully not. Hopefully, Gene's always given us good tips. So great to see you. Tell me, for the folks watching who are saying, oh no, it's coming up sooner than I thought, I haven't even started yet. Any tips for people racing against the clock this year?
I mean, first of all, you can always extend your returns. Okay, so individuals can extend, you know, into the fall, September, October, depending on when you want to do it. And as long as you pay your estimated taxes in, you're all good. So, and people always ask me, like, is that going to increase your chance of an audit? And it really doesn't. Okay, so if you just don't have your stuff together, extend and then make sure your taxes are paid in. Okay,
so you wrote it in the Inquirer.com, this great article about why you need to start thinking about next year now, if this year wasn't enough. But why do we need to, what kind of things do we need to think about in terms of next year?
So first of all, when people say, like, at this time of year, is there anything I can do to save taxes for 2023? 2023 is gone for the most part. The only tip that I have to save taxes still for 2023 is if you make an IRA contribution or a retirement plan contribution. Individuals and businesses still have the ability to make those contributions now and get a deduction for 2023. Okay. So that's that. Okay. Now we're looking ahead to 2024. Okay. All right. So a lot of tax changes on the way. Hopefully we'll talk about a couple of them. But you know, it's most important right now while we're in April to talk to your accountant, and hopefully you have an accountant, to start planning out what you can do to save money on your taxes. This is the time of year to do it, not in December.
Okay. Good point. Let's start with business owners. Some things they can do. You have a whole bunch of tips in this article. We're going to highlight some big ones this morning. First thing you said is buy equipment. Yeah.
So, you know, if you're a business owner and you buy equipment, you can deduct a lot of it in the first year. You don't have to depreciate it over a period of time. Used to be you could deduct like 100% of it in the first year. That went down to 80%. This year it's only 60% in the first year, but it's still significant. So buy equipment, get it into service, and you can take a big tax deduction for it this year.
Okay. Another thing you say we can buy, if you're a business owner, a clean vehicle.
Yeah. I mean, you know, thanks to the Inflation Reduction Act, there were new rules around clean vehicles, and that's for businesses and individuals as well. So Eve, you can go and buy like an electronic vehicle or a hybrid vehicle. They got to meet certain requirements. You can get up to a $7,500 tax credit when you buy it. Not only that, but the IRS has set it up with a lot of auto dealers where you can get that discounted on your car right there. Like, you don't have to file the return till the end of the year and wait for it. You buy the car, $7,500 gets applied to it. Same thing with a used car. Not as much of a tax credit. It's like $2,500. But if you want to go clean, it's definitely a great option. Great way to save on tax.
Okay, good to know. Start a retirement plan. Something else you mentioned.
So I got to give a big push for Roth retirement plans this year. So Eve, like, you know, we can contribute up to $7,000 to a Roth IRA. Roths are after-tax retirement plans. So if you put money away into your regular IRA or 401k, you know you're just deferring your taxes into the future, and then the government's going to force you to take the money out and pay for it, okay? A Roth, it's after tax. So you could put a few $1,000s into a Roth right now. It will grow tax-free forever. And you can take it out whenever you want. There's no requirements. Just like, think about that. So, I mean, if somebody's in their 30s or 40s and they put away, you know, $5,000 into a Roth IRA, maybe it grows to $10,000, $15,000, $20,000 over the next 30 years. You don't pay any taxes on that appreciation. So max out your Roth.
Okay, sounds good. Let's talk pay for employees. Pay for family leave and raises and bonuses. Let's sort that all out.
So very quickly on family leave. So if you're a small business or any size business, if you're more than 50 employees, you're required to give employees unpaid family leave, okay? That goes back to 1993. Regardless of the size of your business, there is a tax credit available that if your employees take leave for pregnancy or sickness or something in the family, and you give them that time off, depending on the time that you give them and the amount that you might compensate them during that time, you can get a tax credit for doing that. So say you have an employee, they take leave of your business for 12 weeks to, for childbirth or whatever. If you decide to pay them like 50% of their salary during that period of time, you can get a tax credit. The government will help you out and do that.
That's so great.
Yeah, it is.
A lot of great tips on your article on the Inquirer. inquirer.com. Just real quickly, for the average Joe, what should they be doing to save for next year?
Well,
some of these things.
Yeah, I mean, some of these things with the electric, the electric vehicle thing, I think is really a great thing to do. The biggest takeaway I can tell you is you need to be talking to a tax professional. Okay. I do like tax software. I do think that there's a lot of stuff you can do on your own, but spend a couple $100 with an experienced CPA. They'll look over everything you got, and they will make a lot of suggestions for you. It just depends on your situation.
Great. And do it now so you're ready for next year. All right, Gene, great to see you. Thanks so much. GeneMarks.com for a lot of great information. We just scratched the surface this morning, but always great tips. Thanks so much.